Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome to the Deep Dive, where we cut through the noise and get straight to the insights you need. The tech sector, it's relentless, isn't it? Always evolving, always shifting. And you really see that in mergers and acquisitions. I mean, every quarter tells a new story, a fresh chapter in this whole saga of innovation, consolidation. So the question for you, our listener, is what stories are the latest M&A numbers telling us now? Today, we're taking a deep dive into the Q2 2025 Tech M&A update. We've gone through a really detailed recent report by Oaklins. It's their quarterly tech M&A update for Q2 2025. It gives a great fresh look at the tech M&A scene in Europe and Germany specifically. And our mission, as always, is to give you those key nuggets so you can quickly grasp the big trends, understand the why, basically get a shortcut to being really well informed on this market activity. Okay, so let's unpack this. The headline finding from this Oaklins report seems pretty clear. A definite rebound in M&A activity, both across Europe and in Germany. Now, this comes after, things slowed down noticeably in Q1 2025. That had people wondering, didn't it? Especially maybe in the lower middle market, where were things headed? But Q2 seems to have answered that with a pretty resounding up.
Yeah, what's truly fascinating here is just how specific and significant this rebound actually is. The report spells it out, the number of transactions across Europe. It jumped by a solid 8%. We're talking going from 605 deals in Q1 up to 651 in Q2 2025. That's quite a jump. And it wasn't just Europe overall. The German market mirrored this, positive momentum. It had its own noticeable increase in deal activity. For market watchers, this isn't just a simple bounce back. It signals, renewed confidence, maybe even a sort of defensive aggression. Companies re-engaging. It suggests that strategic needs, maybe getting critical IP or finding that specialized talent, are pushing companies back to the M&A table. And that's particularly true in a segment like the lower middle market, where agility and niche expertise are so highly valued.
That strong bounce back definitely stands out. And you mentioned strategic imperatives. So digging into the European tech M&A landscape for Q2, this detail really jumps out. The sheer dominance of strategic investors. When we say strategic, just for our listeners, we mean companies buying other companies for operational reasons. Yeah. Fit, synergy.
Exactly. Yeah. Operational fit, integrating technology, market access.
Right. And this report shows they account for over 90% of transactions. I mean, over 90. So here's where it gets really interesting. Does this suggest that financial investors like private equity, are they still holding back a bit? Waiting maybe?
Precisely. And it's not just a slight majority. Over 90% it's overwhelming dominance. What this points to, I think, is a market that's deeply focused on industry consolidation. Companies are acquiring others not just for sheer growth, but maybe to gain market share, access new tech, think cutting-edge AI, specific SaaS solutions, or achieve real concrete synergies. And often, the focus is very much on revenue synergies, like cross-selling products, expanding into new customer bases, rather than just pure cost-cutting. It really speaks to a market where established players, often the larger corporations, are looking to strengthen their core or expand into adjacent areas, secure that long-term advantage. And to your point about financial investors, that 90% figure suggests a clear split or bifurcation in the market right now. Financial sponsors are definitely still active, don't get me wrong, but they might be waiting for, say, more favorable financing conditions, or for valuations to maybe settle down a bit more, especially for the bigger, more complex deals. For that lower middle market, though, where strategic buyers are often hunting for those niche players to integrate, this dominance means a very clear acquisition path for founders. It's maybe less about speculative growth right now and more about securing specific capabilities or just shoring up your market position.
Okay, so we're seeing these strong strategic moves, often driven by, like you said, a need to adapt and consolidate. And if we connect this to the bigger picture, the report also highlights that both strategic and financial investors kept emphasizing international growth strategies. Cross-border deals, they represented a significant 53% of total transactions. Half. More than half. What does that high percentage suggest about the European tech market's, interconnectedness, its growth ambitions, especially when you think about different regulatory landscapes maybe? Are certain European countries maybe more active as buyers or sellers?
Yeah, that 53% is a powerful number. It really underscores just how global and interconnected the European tech scene is. It transcends national borders. And look, it's not just about market expansion, pure and simple. It's often about the hunt for talent, specific tech innovation, accessing different customer bases. The complexities of cross-border deals are definitely real. You've got different legal frameworks, regulatory hurdles, cultural integration challenges. I mean, it's not easy. But clearly, the strategic need for growth is outweighing those hurdles right now. We're seeing companies looking way beyond their immediate borders for the right targets. And often, it's the agility and the specialized offerings of those lower middle market companies that make them incredibly attractive targets for these international strategic buyers. The report doesn't break it down explicitly by buyer-seller nations in this summary, but the overall trend. It points to a really fluid European market. Capital and innovation flowing pretty freely.
Okay, so the market's bounced back. It's very strategically driven and increasingly global. Got it. Now let's shift focus a bit. Which tech sectors were the busiest in Q2? It looks like there was some particularly strong positive momentum for certain types of software. What's that telling us about the hotbeds of innovation right now? Where are companies putting their money?
Right, the data from Oaklins here is quite telling. M&A activity showed really strong positive momentum for application software. That saw 325 transactions. And system software, too, with 48 transactions. And crucially, both of these categories rebounded pretty significantly from the declines they saw back in Q1. So what this tells us is that companies are heavily investing in the tools and platforms that, run businesses, that underpin our modern digital infrastructure. Think about ongoing digital transformation, the need for robust cloud solutions, maybe the demand for specialized SaaS applications, things that streamline operations or enable new AI capabilities. These are really fertile grounds for strategic acquisitions, often involving those innovative smaller companies. Now, in contrast, other sectors like IT services and semiconductors, they were still active, sure, but saw more stable, kind of moderate activity, not the same big jump, which, raises an important question for us to think about. What do these sector-specific trends tell us about innovation hotspots, investment priorities, maybe even market maturity within tech?
The strong showing in application and system software suggests a really clear push towards enhancing core operational capabilities, leveraging that cutting-edge software. This is where you find a lot of those buy versus build decisions playing out right, especially as companies want to quickly integrate new tech without those long, painful development cycles. And for lower middle market companies specializing in these high-demand software niches, well, that could mean becoming a prime acquisition target.
That breakdown definitely paints a clearer picture. Where the immediate value is, where the strategic focus lies, you can really see the growth drivers there. And it's not just the broad market numbers showing this fluctuation. Even firms like Oaklins, who put this report together, see it in their own deal flow, right? How does their advisory track record, say, from 2020 through 2024, how does that mirror these broader market ebbs and flows we're talking about? Does it give us any more insight into the consistency or maybe the volatility of deal making, particularly in that lower middle market where so many of these deals actually happen?
Yeah, it's a fantastic way to see the market's dynamism, but through a consistent lens, like you say. The report mentions Oaklins has advised on and closed 474 tech transactions between 2020 and 2025, a significant number. And what's interesting is that 34% of these were cross-border deals, which just strongly reinforces that global theme we were just discussing. Now, if you look at the breakdown of their tech transactions per year, you see some really pronounced fluctuations. It perfectly mirrors the broader market sentiment, the economic shifts. They had 54 deals in 2020, then a big jump to 87 in 2021, peaking at 97 in 2022. Big year. Then things cooled off a bit, 67 in 2023. But then a rebound to 74 in 2024. So these numbers, they imply that despite the market's ups and downs, there's been consistent deal activity underneath it all. You see clear peaks aligning with periods of, greater liquidity, more investor confidence, then a dip. And now maybe the beginnings of a recovery phase again. It just illustrates that fluctuating yet persistent nature of M&A in tech. And for advisors, it highlights the need for adaptability, doesn't it, across different market cycles.
Especially when working with all sorts of deal sizes, including those in the lower middle market.
All right, so if we bring all these threads together, what we've really seen in this Q2 2025 tech M&A update is a decisive positive rebound. Deal activity up across Europe and Germany. A welcome change after Q1, definitely. And this rebound was heavily driven by strategic investors. Over 90% of transactions focused on consolidation, getting those crucial synergies. And a big chunk of these deals, 53%, were cross-border, highlighting that strong focus on international growth, the global search for value. Sector-wise, application and system software really led the charge. Strong momentum there. While IT services, semiconductors, more stable, moderate activity. So wrapping up, what does this all mean for you, our listener, especially if you're operating in or just watching that lower middle market space? Given this clear rebound, the strong emphasis on international growth, strategic consolidation, how might these trends influence things like investment strategies, maybe talent acquisition, or even just the competitive landscape in tech over the next few quarters?
That's the million-dollar question, isn't it? The rebound is positive, absolutely. But you have to consider its sustainability. Are we seeing robust valuations coming back? Or are some deals maybe still reflecting a bit of that buyer's market hangover from Q1? It's hard to say definitively yet. For the lower middle market, like we touched on, this strategic dominance, it could be a huge opportunity for founders looking to exit. Larger players are clearly hunting for specific tech and talent. But it also means more competition for those prime targets, right? We might see perhaps a continued focus on acquiring companies with really strong recurring revenue models, or maybe highly specialized AI capabilities. That seems likely.
So the message is, keep an eye on that continued strategic consolidation, but also pay attention to how financing conditions evolve and whether these cross-border trends keep accelerating. Will we see a surge in maybe smaller niche players getting snapped up for their unique contributions? Or will the market start to favor bigger, more complex integrations again? Something to definitely ponder as you look at the market. And remember, all this valuable information comes straight from the quarterly tech M&A update Q2 2025 by Oaklins. If you want to dive even deeper, explore the full report for yourself, highly recommended. You can find it directly on their website. That's www.oaklins.de. Thanks for joining us for this deep dive.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.